and fairly big stock, almost 2,700 crores is the market cap of this company. But let's get some more immediate trading ideas in. Siddarth Bhamre of Angel Broking also joins in. Siddarth, you have 4 stock calls for us. Let me start off with the buys. You have a buy on Apollo Tyres. That stock was in the news yesterday. You see more upside technically?
Yeah, so the stock has corrected significantly and it's trading near to its support. And what we have observed is some sort of formation of long positions. Even if you look at the cash-based volumes yesterday, Sonia, it has been quite high. In an environment where we don't expect market to significantly go up, and neither probably because of immediate triggers looking major downside as well. Mid caps may tend to outperform large caps probably in a shorter duration of time. So Apollo Tyres is one of the mid cap stock where we are suggesting to go long for a small target and stop loss mentioned on your screen. But this is not a very long term buy. So these are purely whenever we give mid caps buy in FNO segment, these are purely from very short term perspective. So just for a week, not beyond that.
Okay, what's the call on the Nifty itself for you, Siddarth? Any strategy?
Yeah. So I am not very optimistic on market despite some of the statistics suggesting that one should not be negative. Case in point, if you look at put call ratio around 0.71, and at least twice or thrice in a year we discuss about put call ratio coming to such lower levels and how market bounces back when put call ratio is so low. At the same time, my team is saying that they are unable to find any sell calls, and most of these stocks are looking attractive when they are near their support levels. IVs are not very high, but they are showing certain degree of increase. They are around 16%. So all these factors suggest that okay, this market probably is a good buy. But you cannot have this kind of opinion if stronger hands like FIs are selling our market. So if we see their statistics for November series, it's not very encouraging. So 5,000 crores of index futures unwounded, as well as some of that is fresh shorting, which is not a good sign. 6,000 crores of cash-based selling, and they have been very active in option segment and especially in writing call options. That's the reason you have put call ratio at 0.71. Because there's more of call writing rather than call buying, or rather than put writing, I would say. So if I combine this, it suggests that though it might be looking attractive even from shorter term, that Nifty may show some bounce, it may not. So hence I would suggest avoid going long in Nifty. It is possible that recent lows would be breached again, and we are probably heading towards 7,500 levels, and I'll be cautious on Nifty.
Okay, so be cautious on the Nifty, but let's get back to talking about individual stocks and where you can make some money. Mr. Tulsian, the other stock you've picked up for us is Kakatiya Cement. That stock has already gone up about, what, 25% this year. You expect more upside there?
Yes, maybe in 1 year about 40 to 50%. Okay. But my short-term target is about 170 in next 6 months. So I don't know how much it translates to. 35 rupees gain. So maybe about 25-30%. But coming, Sonia, specifically on this company, again, this is a sugar and cement play. They have a lower capacity of 3 lakh ton per day cement and 3,200 ton crushing per day of sugar with 17 megawatt of cogen. Now, if you really see the, as I already briefly discussed about the cement prospects in Andhra and Telangana. This is also Andhra Telangana company. I'm combining both as of now, because for the developmental purposes, though the political boundaries may have got created, but for all purposes it is still the same, have the same potential and all that. So the cement, again 3 lakh ton capacity, and coming on the sugar, the recovery and the positive view is continuing, building up because of this rain and all that on the sugar stock. And if you specifically come on the company's performance for Q2, they had a top line of 45 crore and EPS of rupees 6, and FY15 had an EPS of 18 rupees. Now if I just simply say that okay, 6 into 4, that is 24 rupees is an EPS, probably that may not be the case, because Q1 had a loss. Because again, as I explained, sugar division had an EBIT loss of 14 crore, and here if you really see, the PAT was at 5 crore for Q2, which has given you an EPS of close to about 6 rupees for Q2. It won't translate into that, but expect a EPS of closer to about 18. But I'm very positive on FY17 working. I won't be surprised to see an EPS going by maybe 24 to 25 rupees, and that is probably the big trigger. Since you have asked me and I've given you that in one year it can move to about by 50%. Coming, it's a debt-free company. present book value is at 235 rupees. Share is ruling at 135 rupees. And the best part is that a company is holding cash of 30 crore, debt free, and they have cash of 30 crores, which translates into 40 rupees per share. That means you are buying 100 at 134, you are just paying for 94 or maybe sub 100 rupees for the core business of the company, and that is going to get realized by the market. And as I said, that future working is going to be very good for the H2 as well as for FY17. So taking all this into consideration, book value of 235, cash of 40 rupees, EPS of 18 rupees is expected, which was for FY15 also, likely for FY16, but quite positive on FY17 with EPS of about 24-25. So taking all this into consideration, take 170 as the target for maybe in 6 months and maybe 200 plus in next 12 months.
Ooh. Okay, that sounds like a very handsome gain. That would be 50% if it got off to 200 rupees. Prakash, I wanted to ask you about auto ancillary stocks. We saw that bit of a downturn coming in the Motherson Sumis and the Bharat Forges, each for separate reasons. Is the trough over? Motherson Sumi is actually, I think, month to date is 11% higher.
Yeah, it's already seen that uptick. So has happened to Amtech. You know, if you see the issues getting resolved over a period of time. So I think very clearly, the global platform for most of these large auto ancillary providers is kind of opening up, and acceptance levels have gone up significantly. But there's still a couple of lesser discovered stocks which continue to do well and innovate. One stock that probably you could look at is Gabriel. In a brilliant business model. They are into shock absorbers. We've not talked much about the stock, and it's actually one of the largest suppliers to two-wheelers, but it's forks and shock absorbers is what it supplies. But it gets eclipsed by Munjal Shaw, which is the in-house supplier for Hero MotoCorp, and because of that the numbers are more favorable for that. But what Gabriel is seeming to do is they've got into a lot of different technologies which will also incorporate four-wheelers. So imagine getting into shock absorber for CVs, and that's a new area for India. Now that is something where most of it is right now imported, so it's a huge import substitution kind of a game. They've tied up with a company in Netherlands. They're competing with your regular players from Italy, which are kind of market leaders in that. But you'll have to look at these pockets in auto ancillary, Lata. In fact, Bharat Forge could probably see a turnaround given the fact that all the negative is priced in at this level. There is a troughing of sorts, but you'll still have value in terms of companies which are in that growth phase and not just a recovery phase. So auto ancillary continues to surprise us with the kind of nuggets that you keep on finding every time you talk to people. There's always a new story that's emerging. So we just happen to have spoken to Gabriel. We're still kind of evaluating that, but I think it's a very promising area to look at.
I was just going through the numbers though. I mean, if in the first half of the year their revenues have actually fallen for the company marginally, wouldn't that be a worry for you?
Yeah,
while others are growing still at about 10-15%.
Yeah, so they have taken their eyes off that main market of theirs, which was two-wheeler shock absorbers. Now what they're trying to do is get into that CV segment, which is high value, low volumes. So once they kind of master that, it takes time to get through that cycle on R&D and approvals and all of that. Once that happens, so they got into these 3 collaborations. Their 5 plants work only on forks and shock absorbers, but these new businesses that they are now kind of nurturing will take about 6 months to really get monetized. But once that happens, you'll have, of course, even debt reduction is a big challenge for them. So they're trying to do all of that.
Okay, well, let's get some more trading ideas for the day. Siddarth, you have a buy on Karnataka Bank. That's interesting because we've seen some amount of attraction return in the PSU banking space. But what are the levels to watch there?
Well, again, we are seeing that PSU space was slightly outperforming private sector space in this fall from 8,400 to 7,800. We are liking PNB in the larger space. But last couple of days we have seen some buying happening in Karnataka Bank, and cash based volumes were also good, though we haven't seen much of activity in FNO segment, Sonia, over here. But we are anticipating some sort of speculative buying both in cash as well as F&O segment. Again here I don't have very aggressive price target. Stock is quoting somewhere around 124, 125. Maybe it can bounce to 135, which is less than 10% for a mid-cap stock. Can be a day's time also. So fixed stop somewhere around 120 and go long in Karnataka Bank.
But wouldn't the BOBs and the SBIs be more attractive? I mean, the bigger state-owned banks up until even Canara, even Andhra have had a fairly decent run. None of those stocks attract you, Siddarth?
They do, Lata. In fact, last week we mentioned PNB, but we can't mention all the PSU space at one go for a trading idea. SBI also last week we were buyers and we still remain buyer over there. Not very aggressively, mind you. This is more to do with the outperformance they will show in a falling market. And Canara Bank, as you rightly pointed out, there also we have seen good cash-based volumes and some formation of long taking place. And mind you, there are some short positions in Canara Bank which are still yet to be covered. So even that stock is looking attractive. But KTK Bank, is almost forgotten since last couple of months, and that is where move has not yet come. And probably some buyers would emerge in next couple of trading sessions over there. That's the reason. Otherwise, other PSU banks are also looking attractive. But mind you, don't go very aggressive. These are very short-term picks. Overall, my opinion on market is not very positive, and PSU banks may be also not spared later. But for a week, trade with positive bias.
Okay, but you do have two short calls, so let's start with that. You have a short on Hero MotoCorp. That stock in the last couple of months has been making higher tops and higher bottoms. So in a sense, the trend has been on the upside. But you think now the stock has peaked out?
So it's just the way of looking at it. So technically, if you see, you are right pointing out that it's making higher top, higher bottom. But there's something called formation of ascending head and shoulder, and that is what it's happening. I think it has support. That head and shoulder has a support somewhere around 25-50 odd levels, and I'm anticipating breach of it because I'm seeing formation of short positions in F&O segment. At the same time, this entire rally from 2300 to 2700, this 400 points rally, we haven't seen any major formation of long positions, which also says that the move is not sustainable. That's the reason I'm saying to short this counter. Large cap stock can go along with Nifty on the negative side. Again, I don't have a very aggressive target price, but yes, I'm expecting more than 120 points fall. So I have a target of around 2494 here, and I would suggest to fix the strict stop loss around 2671.
Okay, and finally you have a sell on Oro Pharma as well.
So, this stock, Lata, we all know that has really gone up significantly and hardly shown any kind of correction. And generally people don't come out with a sell call in such a strong stock. But if you look at the price movement very closely, Aurobindo Pharma has not made double top sort of thing in last several months in span of say 20 to 25 trading sessions, and now we are seeing that around current levels we have seen stock somewhere around making around 850, 860. It's facing resistance. And if I look at particularly yesterday's F&O data, huge volumes after change in lot size, more than 8,000 contracts volume. That's quite huge for Aurobindo Pharma with formation of short positions. Not very huge, but again 3% rise in open interest. I feel this is formation of short positions against some of the portfolio holdings. So I'm not very optimistic. I do have aggressive downside target prices, but right now I'm limiting myself to 753. So fixed stop loss somewhere around 854 and go short in Aurobindo Pharma.
Okay, so those are two short calls, one on Hero MotoCorp and the other one on Aurobindo Pharma. But we're not done with trading ideas just yet. Let's hear out some more in our segment Super 6.
My first stock is Apollo Hospital. Buy it. Stop below 1265. Targets 1293 and 1304. This stock has actually given a probable short-term bottom reversal formation, and it's also shown considerably large volume activity in the last couple of hours in the last session.
My first recommendation today is buy on Glenmark Pharmaceuticals. The stock, after witnessing decent amount of correction which was led by fresh shorts, long unwinding, has now seen some amount of short covering. All in all, the stock is very cleverly positioned. One can buy the stock for target price of 1000, keeping the stop loss at 940.
I have a buy call on L&T. L&T has fallen significantly in last few weeks. However, the pace of decline has decreased significantly in last few sessions. And the same is evident from the Delhi momentum indicator as well, as it is showing positive divergence and has triggered fresh buy signal. Overall, this is a good opportunity to initiate fresh long position from short-term perspective. The stop loss can be placed at 1326 and target will be 1435.
My second stock is Bank of Baroda. This too is a buy. Put your stop below 171.80 and keep your targets at 183 and 187. This stock too showed good strength on both the hourly and the daily chart, and it has crossed 200-day exponential moving average on both the charts.
My second recommendation today is buy on Apollo Tyres. The stock has seen good amount of correction from levels of 195, 200 to around about levels of 155. Fresh shorts were seen getting built. However, after small amount of short covering, fresh longs are seen getting built. All in all, this again augurs well for this stock. One can buy this stock for target of 170, keeping a stop loss at 152.
In last few weeks, CEAT has fallen considerably from its weekly upper Bollinger Band towards its crucial weekly moving averages. And the moving averages are now acting as a cushion for the counter, and the stock has formed a short-term base near these moving averages. On the hourly chart, the stock has formed an inverted head and shoulders pattern and has broken out on the upside. So pullback looks around the corner, and one can buy the stock with stop loss of 958 and target will be 1050.
Welcome back. Well, we still have a minute for the pre-market rates to hit, but our head of research, Barinder, has some exclusive information that's flashing for you on an expected sugarcane policy. Actually, Narendra Murkumbi hinted at it. Barinder, what is expected from the government?
Well, what we learned from our sources is that the government is expected, or they are mulling to provide subsidy on cane prices, and this could be nearly 4 rupees 75 paisa per quintal. Remember, the FRP, which is the fair and remunerative price, currently is around 230 per quintal. So that could be around 2%, 2.5% of that FRP amount. How much does it come or benefits the sugar industry? Well, the crushing is expected to be nearly 255 million ton in the current season. So it could be nearly 1200 crores of subsidy which could come to the sugar companies. But the more important fact in this case is that this may be linked to the exports. What I'm able to understand is that sugar companies who will be exporting 12 to 15% of the crushing, they can only avail this subsidy on cane prices. Now, how does it help? We already know that the sugar prices have moved from around 19 rupees to 25 rupees per kg. If the surplus which is in the market is moved out of the country, this may help the domestic sugar prices, and which is the intent of the government. So, if that subsidy on the cane prices come, it's 1200 crores, around 1200 crores amount to the sugar companies. But the more important factor could be linking to the exports and the domestic sugar prices moving higher if that happens.
All right, thanks a lot for that, Varinder. Sugar, that perhaps explains why we saw a fairly decent rally in the sugar stocks as well. We are just seconds away from the pre-opening rates are with us. It's opening with a gap up, but it's not a huge gap up. It's about 25 points higher for the Nifty. Sensex is opening with a 0.6. Actually, Sensex is showing more gains at this point in time, 160 points higher. No, I spoke too soon. Now it's reduced to about 44 points. But importantly, we are going to see a gap up opening for both the indices. The rupee is opened slightly stronger. The dollar cost 65.99 at close yesterday. It now costs 65.95. So that also is registering a bit of a rally in the rupee. That's the way the rupee is expected. The rupee moves. This, of course, is a traded rate, but stocks, quite clearly, there is a green tick at this point in time. Well, Shubham, even if it opened at 67840 levels, you would still advise fresh longs?
Yes, given the fact that, yesterday we did see a counter-attack movement and today there is a follow-up buying which is coming in. So as I said, with a very short-term perspective, I believe that, this pullback could extend to the level of 7950 to 8000. But we should also remember that, this is within the overall downtrend which is there. So it's very important to then keep a stop loss also in place. And if you look at the immediate level, I think 7790 is the immediate support area which can be taken as a stop loss for short-term traders. So with that view, one can look for trading the Nifty on the long side with the expectation of 7950.
Okay, when a couple of these heavyweights that are in the news, one of them of course is ICICI Bank, because they have sold 6% in the life insurance JV for about 1950 crores. So ICICI Bank in pre-opening is higher by 1%. So are some of the other private sector banks like Axis Bank, etc. And Infosys as well. There was a conference call yesterday by the management where they retained their FY16 growth guidance of 10 to 12% in constant currency terms. So Infosys as well is hanging in the green, up almost about 0.25%. On the downside though, you do have a couple of stocks that are under pressure. BPCL is down 2.5% and Ultratech Cement as well is in the red. Siddarth, on two of these stocks that I just mentioned, ICICI Bank and Infosys, what kind of trades do you see and any strategies that you would advise?
Well, ICICI Bank is showing signs that, it may not correct significantly further as of now. We have seen time and again how around 285, 290 this stock has faced severe resistance, which is quite far as of now. If somebody really wants to play from shorter term perspective, then probably one can think of going long over there. I'm not going long. I'm not suggesting to go long in ICICI Bank at this point of time. But are these levels to good levels to short? Probably not. If I see 280, 285, I'll be tempted to short ICICI Bank, provided the overall structure of market remains negative, that is FIS data and other things. As far as Infosys is concerned, we a couple of weeks back were mentioning that probably TCS may not correct significantly and Infosys has chances of correction, but unfortunately even TCS has shown correction. IT space has been showing negative movement, but couple of stocks which we are liking in that space, rather than thinking of buying Infosys in this correction, I think Infosys can come down to 1020, 1030 odd level. So there's still some downside left. Look at Wipro and look at HCL Tech in this space from trading perspective with positive bias rather than fee.
Okay. Shubham, sugar stocks also are opening with some gains. Chartically, any of them you like?
So I'd like to place a disclaimer first that we don't officially cover any of the sugar stocks right now, but given the fact that we are seeing a good movement there, I think with a small stop loss of about 5 to 6%, one can look to trade even Renuka Sugar, which has a next resistance around 17 to 18. So I think that could be one of the stocks to look at.
Not Bajaj Hindustan?
Not really optimistic about that, and as I said that we don't cover most of the sugar stocks, so as we can just see on the chart, 22 is the previous swing high and it is almost quoting around the same, so we need to really see whether it is able to break out above that level or not. If it is able to do that, I think 27 to 28 will be the next level to watch.
Mr. Tulsian, you heard what Varinder was saying about an expected subsidy of 4 rupees 75 paise for the cane crushers, for the sugar mills. Will that help a goodish bit?
See, Lata, let me just quickly, reset the whole thing in a simplistic way. We have earlier heard 3,500 to 4,000 per ton on the sugar export subsidy. Then, we are hearing FRP, then we hear SAP, then we hear 240 per quintal and all that. Let me put it in very simplistic way. 4 rupees 75 paise means the central government will give 50 paisa effective realization on the sugar. Because if you take the 10% yield, in UP it is 9.5% yield, Maharashtra 12-13% yield, Karnataka 12, take 10% as ballpark. So they will be giving 50 paisa, which is not such a big thing. Earlier, in fact, they were planning to give, when they proposed that 4 million ton can be exported, which the WTO, the other countries objected that India cannot give the subsidy on the sugar exports. At that time, it was proposed at 4 rupees. So now what central government, will stand to gain, that because we just discussed that the secondary market have improved by about 5 rupees per kg. So central government got rid of that liability, because they wanted to throw that much commodity from out of country. Now they will only pay 47. If I take 10% as ballpark, then they will be paying 50 paise extra, which was otherwise earlier expected by the sugar mills at 4 rupees. So don't take this as too positive. But yes, markets, see, they all go on these news flows because they are so confusing that people are not able to take a fundamental call on the stocks. And in fact, these things are not very much in the research domain also. So 50 paise subsidy will be effectively given, which otherwise sugar mills have got a rise of about 4 to 5 rupees per kg on the sugar prices in this last maybe couple of months.
Okay. The market's settling with a 0.5% gain. So 7850 looks like will be the ballpark figure at which the markets may open. Prakash, I think we spoke to you after the results season. Anything in the last leg that impressed?
Yeah, so something that has been of significant size as well as a decent performer was a sleepy stock that's kind of rumbled into awakening, and that's Satluj Jal Vidyut Nigam,
SJVN.
And why I wanted to pick this stock up was while we see a lot of buzz around good performing stocks, this is a guy who's been sleeping since a long time, since the IPO actually. And a lot of people have queries saying, we bought into this with a lot of hope and promise, and it doesn't move beyond this 25 to 29, 30 band. What's changed for the second quarter in quick succession, and which is normally a good quarter for hydro players, is they've returned, the core ROE is improved dramatically, and that's something which only happens once your efficiency ratios go up. And both the units, they've actually managed 100% plus PF, the utilization factor. Now that means it's going to be cash positive. There's of course typical receivable list of monies that are expected from J&K, Himachal, all these SEBs. But with Uday and all happening, there could be some respite coming their way. And interestingly, they have started focusing into a lot of renewable energy, this production. So wind energy, solar, which is very different from a hydro player. And interestingly, there is no capex that they have all the way till FY20, which means the return ratios will not get disturbed. It's the only utility which has now become net cash positive. So you can imagine, it's reached that status and it will start getting talked about as a model to replicate for others. So I think people who are stuck with this stock now can be probably heartened that it should move into the mid-30s quite easily. There's traction enough, there's good volume that we've seen in recent times, and I think on the back of result expectations for the next few quarters, it should get re-rated.
Okay, by the way, both of the stocks that Mr. Tulsian had recommended are soaring in pre-opening. Panyam Cement and Kakatiya Cement should come up for you. Both those stocks are higher by anywhere between 6 to about 15 odd percent, 12% now on Kakatiya Cement. So watch out for these stocks. And UB Holdings as well, that stock is under pressure because Vijay Mallya and UB Holdings has been declared as a willful defaulter by SBI. So that stock is down almost about 2.5 odd percent or so. But from the banking space, any of the smaller banks, Prakash, that you would be looking at to buy now? Because we've seen quite a bit of traction in the PSU banking space. Just for a trade?
Yeah, I think Kotak, it's not a small bank, of course, so I would want to venture out of that small restriction, but Kotak seems extremely promising at this point. A lot of triggers that are kind of building up, not just in the near term, but also in the long term. So that's a bank that should see a lot of change of hands in terms of ownership coming from the private sector side, and a lot of foreign participation potentially could get triggered.
Yeah, because of the fungibility issue.
That is, and it's going very aggressively on the fee-based income side. In a scenario where fund base is difficult to kind of shore up.
Okay, well, Shubham, before we let you go, I wanted your view on ITC as well. Well, usually contract ending times, HDFC, ITC come to the aid of the Nifty. Is there a trade in ITC this week?
Yeah, if you look at the overall sectoral behavior, I think FMCG as a whole will start underperforming the Nifty, but that's with a more of a medium-term perspective. But if you look at the chart of ITC, I think with a short-term perspective, there seems to be a trade with a stop loss at 330, and on the upside, which is just a temporary pullback, but it can even extend to 355. So I think for short-term traders, they can look for taking a short-term call on the buy side on ITC.
Okay, Shubham, we let you go on that note. Thanks for joining us and giving us all your ideas. Let's also hear out from our bullseye contestants on all the stocks that they have picked up for today.
Jubilant Life Science, buy with a stop of 390 for targets of 425. Dish TV, buy with a stop of 98 for targets of 109. Take Solutions, buy with a stop of 185 for targets of 220. And UPL, buy with a stop of 434 for targets of 465.
Call is buy call in Apollo Tyre at the rate 158, place a stop loss at 153 and look for the target of around 170. My second call is buy call in Amar Raja at the rate 885, place a stop loss at 870 and look for the target of around 920. My third call is buy call in OBC at the rate 152, place a stop loss at 146 and look for the target of around 160. And my last call is sell call in Mindtree at the rate 1485. Place a stop loss at 1520 and look for the target of around 1400.
My first pick is OBC. I buy it with a day target of 159 and a stop loss of 147. Reliance Infrastructure, I buy it with a day target of 440 and a stop loss of 397. Exide, I buy it with a day target of 150 and a stop loss of 145.
Okay, and Shahina Mukaddam's last idea is a buy on Rallis with a target of 204 and a stop loss of 195 rupees. So that's another stock that she has recommended for today or picked up in Bullseye. Here's a quick recap of Shubham Agarwal's stocks for today. He has 3 buy calls, starting with L&T, where he recommends a target of 1475 and a stop loss at 1304. Also, TVS Motor is a buy call with a target at 320 and a stop loss at 284. He has another long call, which is Havels, where he places the target at 280 and a stop loss at 248. His only sell call is on PFC with a target at 195 and a stop loss to be placed at 236.
Okay, here's a quick recap of Siddarth Bhamre stocks for today. We start with his buy calls first. He has a buy on Apollo Tyres, where he places the target at 174 rupees and a stop loss at 150. Also a buy on Karnataka Bank, target of 135 rupees, stop loss at 120. Siddarth has 2 short calls. The first one is on Hero Moto, where he recommends a target of 2494 and the stop loss is 2671. He also has a sell on Aurobindo Pharma, where the target is 753 rupees and the stop loss is 854. The markets appear to be opening with a 0.5% uptick on the Sensex Nifty as well as on the mid cap and the Bank Nifty, up about 0.6. So at the moment, at least, the Bank Nifty appears to still have the advantage.